Hello everyone, welcome to the Ichimoku charts.com daily analysis for the Euro US dollar FX for Monday, August 13th, 2012. Well, a change of trend to the upside today, and here we have a candle with a higher high and a higher low. Previous day's trading, we had a small black body candle at the end of this downtrend that the market was in. Strong price rejection to the upside from the kitchen sen, the pink line here, and it highlighted how the Ichimoku indicators can act as areas of support or resistance for a market, and here we've seen that change of trend. The small body also suggested that there was potential for a change of trend, and we now have a white body candle and a fairly large white body in relation to some of the candles around it. So some upside momentum from the buyers today. The buyers did, however, lose commitment around the 123.28 level, which was a prior area of strong resistance, and today we've failed to close substantially above there. We've closed just around that level. So that is crucial to this market moving forward. And if we look at the current trading, we are trading above there, and it does suggest that if the market maintains this bullishness in the minor time frames, that we will continue this trend to the upside. Having said that, looking at the position of the close within the range, the market has just closed above the midpoint level, so the buyers have taken control of this market, but it is only fairly weak control. So that does bring into play this 123.28 level once again, and suggests that it is a strong level. In terms of the two lines that I've drawn here, I've drawn a channel, a price channel. Here we have a trend line to the upside. We have a trend in place with the market making a series of higher peaks and higher troughs. That's the only time that we can draw a trend line, when we have a trend in place. And then we draw this trend line through the intervening peak between the two troughs here, parallel to the trend line. And it does give us an upside target for this market, and here we see that the market tested to roughly around that level and was rejected, and it coincided with a very strong level of previous support and resistance around the 124.55 level. If the market does rally up through these levels here, then the upper trend channel does give us a target, but we do have some very important levels before the market interacts with those areas. Now, in terms of the Fibonacci extension, now that the market's in the first time frame uptrend, we can examine the relationship of the first time frame uptrend to the prior time the market was trending up, and here we see rejection from the 38.2% level, and that could be significant for this market. That's an important level. It does suggest that there could be potential for a change of trend. This is something of a spinning top type candle, some indecision because of the strong downside price rejection, but also the upside price rejection from the Ichimoku indicators. So there is potential for a change of trend. If the 38.2% level holds, then we have other areas at the 50%, which is at 123.95, and the 61.8% at 124.32 that have potential to be strong resistance areas. We can now also examine the Fibonacci retracement of the prior downtrend now that the market's trending up, and here we see strong rejection from the 61.8% level and the 50% level. 61.8% level is at 123.65, and we have this strong rejection, so that also suggests there is potential for a change of trend, but as very often we do require confirmation of changes of trend. Now, in terms of Fibonacci, in big picture terms, the market is bearish by trading down below the cloud. Here we see the market's been trading below the cloud for quite some time, and the cloud does offer itself as a potential area of strong resistance for this market. Certainly the area around 124.55 will be solid resistance to this market if we do continue rallying. We have some decent rejection from around the 124 level here on a couple of occasions, and in the recent past these swing highs failed to close above there, tested up to the 124.55 level, and strong resistance offered through the cloud, extending up to about the 125.86 level at the moment as well. In terms of the Kijun-sen, the market is trading above the Kijun-sen, so that could be positive for this market. It does suggest that the market's bullish in that medium-term time frame, and we are also trading above the green line here, the Tenkan-sen. We can't see it because it's behind this support level, but it's at this 122.87 level. So some bullishness coming into this market, but very, very strong resistance overhead.